Okay. This is a reaction to Michael Saylor and an article on Zero Hedge today called Bitcoin is Capital. And I think this is a really good exercise for everybody to go through as we think about the stock market's at an all-time high. We're building, the star mind, and there's trillions and trillions and trillions. And nobody maybe has any sense of what anything is really worth or how the numbers work. So, and Bruno started off as Bruno Crypto, and that sort of evolved into blockchain, and which is the same thing. But at the time, it was at the hype of Bitcoin. Remember the Bitcoin eyes, the red eye? I never liked the whole Bitcoin story as just a like buying a put option on the US dollar. That it was digital gold, the dollar's going to collapse, and it's just the inverse of the dollar. And then that turned out not to be the case, because the stock market and other risk assets would go down and the dollar would go up and Bitcoin would go down with it. So I never really liked that argument. I studied it enough. I got into blockchain because of a guy doing things in healthcare, of all things. So I'm really into the decentralized aspect of everything. So this Michael Saylor guy has made um his name's Michael Saylor, and he's made, quote, the world's biggest Bitcoin treasury company. Now, a big part of why you own crypto is to make sure that you control it, that it doesn't have any claims on it. Okay? So debt is the problem. What's the problem with the dollar? Debt. Is it that America has no economy or something? No, not at all. Did you know that we're the second or third largest exporter of gold? Or we're huge. We looked at it very strongly. So I never really got into the dollar collapse thing. And then we just took over Venezuela, so now we have the second largest oil reserves in the world, basically as a colony. Okay. So this guy it's Monday, the goddamn blowers are here. They sell those things that run on a battery, but let's all calm down. So I think this is a really good moment to stop and say, what I know this is maybe too philosophical, but if you're thinking about your investment accounts, your life, your house, your kids' education, sometimes you need to come out like Vince Lombardi at the beginning of the season and go, this is a football. And everything goes back to basics, then we expand from there. So I went through this article, and the first thing I'd have to say is I don't like the look of Michael Saylor. I just don't like the guy. He just hits me wrong. Okay. But, you know, I don't like Sam Altman. I don't think I've ever seen Sam Altman do, say, or sit in a chair and I wasn't completely creeped out with it. I think Sam Altman is a huckster. I think he's one of the great Silicon Valley hucksters. And my question today, and I'm leaning into this, that Michael Saylor is a huckster. Because the real argument for Bitcoin is that it's your asset, you control it on a wallet, hard wallet, whatever. There's no claims against it. Nobody can print it. Nobody else is in control of it, like a banking authority. By the way, I do have to do a quick digression. The Europeans just passed a bunch of crypto legislation, and it's very, very well done. And I just commented on it, what is it with America? We can't have any clarity on anything. We don't really know where crypto is. Is it in the banks? Is it not in the banks? What are we allowed to do with it? And that's on purpose. It has to be on purpose. But really, Europe is, from a regulatory standpoint, is well ahead of the United States in terms of blockchain. For example, there's a digital exchange for blockchain securities in Luxembourg. It's been operable for like 4 or 5 years. But I would say the same thing about like AI in China. Why don't they have these problems? Like the headline this morning is that Facebook has had to stop using Claude because Claude, remember that silly commercial, your peanut butter's in my chocolate? Like the AIs are like infecting each other. I mean, for the country that's supposed to like win the war on AI, because everything's a war on terror, war on drugs, war on this, war on everything, right? Everything's a war. We're winning the war of AI and we're not winning. And it's because we pretend like this is all freedom and this is all just capitalism, and that's not really the case. But let's go through. I want to go through this thing. So I used, and I'll put it up for subscribers, but I'm going to give you about 80% of it. But there's a nice little presentation that I'll put up for subscribers. I would say that this is like something you sit down with your kids or even like have a conversation with your financial advisor and be like, the theme here today is Bitcoin is capital. Is that true or false? So, it is not capital from the sense that you can do anything with it. That's why they created Ethereum, because the blockchain can't even carry any other data. They've made some changes to that. There's Bitcoin Cash, blah, blah, blah. But you really can't use the Bitcoin blockchain for any other kind of data. So this Michael Saylor strategy, which is now called Strategy Inc., is the name of the company. The symbol is MSTR. It's the world's largest Bitcoin treasury company. Again, why does Bitcoin even need a treasury? The whole purpose is that there is no such. Follow me? Okay, so they've reworked the plan, and it goes like this. They're going to keep $2.5 billion in cash. They're going to raise the dividend on their preferred stock. Preferred stocks are generally a way to entice people into a big, big dividend. It's 12%. Now, Bitcoin doesn't yield anything. It doesn't, if it was a cow, nothing would come out of it. Just like gold, right? You can like hold gold, look at it, it's shiny, but nothing, it doesn't make more golds. They will repurchase preferred stock up to 1 billion. They will repurchase their common stock, not the preferred, but common. I'll explain that for people. This is all Greek too. And then it authorizes the sale for the first time of up to 1.25 billion in Bitcoin for specific purposes. So it's setting the groundwork that it can buy and sell its own securities, and it can buy and sell Bitcoin. Spoiler alert, the big concern here is, I think, baked into the story, and I haven't listened to all the interviews, is that the idea is that Strategy Inc. is big enough to move the market, to manipulate the price of something. The Hunt brothers did this, I think, in the late 70s or early 80s. They tried to corner the price of silver. They tried to buy all the silver in the world. I actually, joking with somebody, said, maybe we should corner the market in Polypay sheep. That's the breed of sheep that my dad, like, that wouldn't be hard. Like, you could corner the market in all Polypay use, so like with probably a couple $100,000, because it's such a small asset class. Here in California, I think there's like 2 ranches that grow like 90% of the poinsettia plants, right? So they sort of corner the market. They set the price. Same with the pistachio company, that wonderful company. You see all the pistachios. Okay, back to Bitcoin. So already it's a little bit strange that the argument for Bitcoin is that it's nobody else's asset, but their business model is we're We're going to manipulate the price. It doesn't work for me. Okay. The CFO, Andrew Kang, Kang, framed the rationale succinctly. Bitcoin is capital. This program gives Strategy the flexibility to use a portion of its Bitcoin reserve to strengthen the digital credit fund. We have a blower here for a second. Fund dividend payments, interest expense, and fund accretive repurchases when Bitcoin monetization is more favorable than issuing. In other words, they're just going to fuck around and find out. That's the plan. They're going to pay a 12% dividend by fucking around and finding out. Strategy is evolving from a one-way capital issuance to active capital management. We intend to move between issuing securities when capital is attractive and repurchasing securities when our instruments trade at levels that make buybacks accretive. Now, there's these layers to this thing that are a little bit confusing. Now, understand, let me tell you something right now. When they did the mortgage thing, it wasn't just like the savings and loan crisis where banks just went nuts and just gave loans to anybody. What they did is they make like this tort, like a layered cake of this is AAA, it gets paid first, and then this person gets paid second, then this person gets paid, not person, but the fund structure has like a waterfall, like a champagne thing. So this is AAA, all the mortgages pay into that. Then this is maybe AA, and then this is triple B, and then this is triple C, and then this is the equity. The equity gets paid last. They have the common stock, what they call stride, strike, stretch, and strife. I don't know if they came up with this. Again, it's like a financial engineering project. It isn't the whole point of Bitcoin to get away from financial engineering. See, this is why people like the Italian guy who lives in New York, and he's like the Bitcoin purist. I can't remember his name. I just never really found him very. So the story, what they would try to explain to you is that all financial systems, the dollar, the stock market are all Ponzi schemes, and therefore everybody's going to buy Bitcoin and drive the price of Bitcoin up, and that's the definition of a Ponzi scheme. And this is my thing, right? This is how I made content on it. And then you'd hear people say like Ron Paul would say that like he would call the US dollar funny money. And it's like, well, Ron, it's the money. You can give me your funny money whenever you want. Okay. The other reason it's not funny money is because the US Treasury says it's not funny money, and we have aircraft carriers. Then people would say, well, the only real money is gold, and that all fiat money goes to zero. And I would also say that all gold standards eventually end too. See what I'm getting at? So, like, none of this is easy. Okay. So, to be sort of funky with it, I asked Manus, I said, why don't you go in and make a comparison between Bitcoin and a coal company or a cattle company? Cattle or capital. A coal company is capital. Like I always like to point out, there's one called, you go look it up, ARLP, pays a 9 or 10% dividend. And it's like been since COVID, it's like one of the best stocks you can own. And they're just pumping the coal out of the mountains in southern Appalachia. And that's how they make their 9%. How is Michael Saylor going to make 12% off of a computer program? Because that's what Bitcoin is. It's a computer program. So I asked it, where does the 12% come from? Before I give you the answer, let's just think about this for a minute. Okay. This is iced tea, by the way. It's not whiskey, but let's just for fun. People do this, by the way. People do it with wine, for example. What if we just went to Kentucky and bought 10,000 barrels of bourbon without any branding, just in the barrel, just sitting there with the idea, let's like buy half of all the bourbon in a barrel in Kentucky. See where I'm going with this? So that the bourbon in the barrel becomes like our capital. Actually, that is considered capital, by the way. And if the price of whiskey goes down, we'll buy more bourbon. If the price of whiskey goes up, we'll sell some bourbon and we'll try to generate a dividend that way. Okay? A little bit more convoluted, but one of the ways you can do this with stocks, and you should be aware of this, is you can take your, let's say, Jim Beam, by the way, was bought out by the biggest brewer in Japan, but let's just for fun say it's Jim Beam. So let's buy Jim Beam's stock. It used to be owned by Fortune Brands. Okay, so or Diageo, or one. I think Diageo is the world's biggest alcohol company. So let's buy Diageo stock, and then we'll sell. Yeah, we'll sell a call option, and somebody gets to buy my stock from me, but they give me cash today, and they only get to take my Diageo if it goes up like 10 or 15%. Now, I used to do this for people all the time as a stockbroker. A lot of people just like the idea. I get cash today. I like the stock, Jim Beam or Diageo or whatever. And if it goes up 15%, maybe I want to sell it. And sometimes it goes up and it doesn't transact. And you get the cash today. See where I'm going with this? You don't have to understand puts and calls, but that's a real basic option thing that really is it's called a covered call, and it's appropriate for little old ladies. Now, who do you think's attracted to this strategy? Retirees. And here's my big, you know how I like to do like philosophical things. I mean, Christ, yesterday I did one called God, Man, and Machine. You know, it's like, why don't you go calm down a little bit? By the way, I didn't post the epilogue. I think I might put the epilogue on for free and entice some people into it. So keep an eye out for that. But they're going to financially engineer this 12%. There's no flow. There's no coal coming out of the mountain, right? That makes 12%. In fact, one of the wealthiest people in Western Pennsylvania, I'm not making this up, I've actually been in the guy's office. Won't use his name, but his company's called Rosebud. And the coal industry, I think it was in the early 80s, completely collapsed. I mean, it was just like, there's no reason to ever go dig that coal out of the ground again. People put up gates on the road. He went and bought all the coal properties when people thought it was over. No one's ever going to go get the rest of this coal. Like I'm sure some of the fields that he bought, he's made 100x return on. He just said, coal isn't going away. It's 37% of the fucking grid. It's not going to go away. It'll go to India. It'll go to China. It'll go to Japan. There's not enough natural gas in the world to make all the electricity. You get the idea. So same with cattle. Like cattle, like bourbon, they're liquid, right? You can put them on a trailer and take them to the auction. And they have this funny thing that they make more cattle. Same with sheep, same with a lot of things, right? Same idea with even the tulip craze and the Dutch famous tulip thing. You know, I have this magic tulip that everybody's going to want. I only have one of them, but it's going to make 100 million of the most expensive, right? So you start to make these like fantasy valuations like we're doing right now with AI. Okay. Okay. So here's what Manus said. Why 12% specifically? Seriously, why not 4? Isn't it much easier to distribute 4% or 6% or 8%? One of the highlights of my career is when Kinder Morgan Pipeline, the second biggest pipeline company in the world, in the country, in North America, cut its dividend. from about 6%, which had been its standard 6 to 7%, and its price would follow that. So if they raised the dividend, the price would go up a little bit and would keep hang in there right about 6.5, 6.8%. They cut the dividend to zero. It's a pipeline. Like you just move things through the pipe, make a little bit of money, and send people money. And this was like a moment I was like, how is Wall Street gonna retire all these people? Well, right now, what they're doing is they're retiring them with inflation. What? Okay, so the NASDAQ earnings yield, this is what I did on Friday, is 2.66%. It boggles the will how this works. How are people going to retire on 2.66% not dividends, earnings? And when I started doing this on TikTok, I would come out and I would just like up the road in LA, there's a big, huge mutual fund, huge mutual fund company. It's called Capital Research. And I would say, go look at this thing called the Income Fund of America. And this is before they started to raise interest rates coming out of COVID. And I would say, go look at that fund, and the Income Fund of America, which is made to produce income, had a dividend yield of 1.6%. And people were just mesmerized by this, rightly so. And I would say, I've been a financial advisor for 25 years. How are we going to retire people on 1.6%? Inflation, the one big beautiful bill, 7% deficits, put $2.2 trillion worth of debt on our children called student loans. That's inflation. Inflation isn't just the price of eggs. Inflation is the expansion of credit. Okay. So here this guy's come in and he's like, oh, you're all excited about Bitcoin because it has like some inflationary relief like gold, like digital gold. And then there's becomes this thing between this guy, Peter Schiff, and Michael Saylor, and they go back and forth on which is the real inflation proof thing. Is it gold? Is it Bitcoin? And then I like to say, well, nobody cares what I like to say. If you like the blockchain argument, I think the Ethereum blockchain argument is much better, but I don't want to talk about that right now. But they just interviewed Warren Buffett when this war in Iran started, and here's Warren Buffett's answer. Well, if we're going to go to war, I'm not going to sit in cash. Which is funny because he's sort of in cash because he has all these T-bills, but he also has a lot of oil, like Occidental. He has a huge position. He may own all of Occidental at this point. In other words, when you have like 20% of your portfolio in oil and gas, like, okay, price is going to go up. I mean, if it goes to $250, you're just sort of like, okay, they're just going to print money. All right, so this Michael Saylor guy gets this thing, and he knows. And by the way, the company didn't start off as a Bitcoin company. It was this software company that wasn't really setting the world on fire. And he got the idea, like, maybe we'll just buy some Bitcoin. You have to put your treasury in something, your checking account, just like mom and dad do, right? So we started to buy some Bitcoin, and then he bought some more Bitcoin with just the money in the checking account. And then they issued some stocks and some bonds, and they bought a lot. And then they bought more, and then they bought more, and then they bought more. And now they come up with this idea that let's just issue this security that's going to pay 12%. And what's the demand for pissed off white men who think that Nancy Pelosi and lesbians with blue hair are the cause of inflation? I'm being facetious, but just go with it. Like, well, I'm going to get some of that Bitcoin. I'm going to get my 12%. Okay. So I said to Manus, what's the risk here? And it said, one, Bitcoin's price holds or rises. Okay. The 12% is only sustainable as long as Bitcoin's price holds or rises, keeping the balance sheet solvent. In other words, our bourbon doesn't go up or down too much. It just sort of generally goes up. Investor appetite for its common stock remains high. so that new equity can be sold at a premium whenever they need cash, and the capital markets remain open to Strategy's continuous issuance program. There is a real question here of why the SEC signs off on this. Now, Berkshire Hathaway can issue shares whenever it wants. I'm not implying that no one's allowed to issue shares. But if the strategy is we're going to hold bourbon, issue shares, and use the cash to pay the 12%, how is that different than Warren Buffett? So we're going to get into Warren Buffett here in a minute. The case that this is not a Ponzi scheme. The critical distinction between strategy and a true Ponzi comes down to one thing. The underlying asset is real, publicly priced, and independently valuable. This is why it's called Bitcoin as capital. I'm not sure that we have clarity on that. In other words, I don't dispute the fact that it's $60,000 or $100,000 or $600,000. Just like I don't dispute the value of the stock market. I have a bigger question, is this even really half the 60% of 50% of assets of people over 60 are in equities, and they're in the S&P 500 and they think they own 500 companies and they really own 10. And half of those are at 10 times sales. And it's not even a valuation question. It's is that even capital? So there's this company, Van Eck, and they have this is a metastable crypto reactor. And this is this idea that we're going to go to Kentucky and we're going to buy and sell bourbon. I just met a guy having a Guinness 2 days ago, and he bought and sold used cars. A lot of them, 25 a week. And he said, I lost money on 5 and I made money on the other 20, which means he's good at what he does. He's also helping to clear the market. You follow me? He's getting the 25 cars off the lots of the big dealers because they don't want used cars, especially if they're not in fashion or whatever. So he takes them to the auction and he clears them through, and he makes money for the transaction, and he can play the market a little bit. Okay. Now, so we did the coal thing, we did the bourbon thing, we did the cattle thing. If somebody gave me $1 million, could I go out and buy $1 million worth of sheep and make 12%? Maybe. And there's a bunch of reasons for that. There's things like the price of sheep could collapse. The price of corn could quadruple. There could be a drought, and we'd have to move. If they're all in a feedlot in West Kansas or something, we have to take them somewhere where there's feed. Follow me? So this idea that Bitcoin is immune from if the fucking price of Bitcoin goes down, they're going to have a problem paying 12%. Okay. And then everybody's going to want their money back at the same time, including the equity. And that's how it actually went worse than that during the credit crisis, because these big stacks of mortgages, you can go watch the movies, nobody wanted them. And what they really didn't want are these lower tranches, right? When you go watch what are they called? The Big Short. You watch those movies. Remember there's scene where, what's his name? The guy that just went to court because he was in bed with a 16-year-old boy. What's his not Spencer Tracy. Spacey. What the fuck is his name? I don't know. And they had this moment where they're like, you're going to have to get on the phone and you're going to have to sell all this stuff this morning. And the guy goes, well, we'll never have clients again. He says, do it anyways. It's conceivable that Strategy could go through that, where they'd have to liquidate. They would just go into liquidation. The part that makes me spooked is Bitcoin is like a 600 to 1.6 trillion dollar asset, and like they're not going to do this with $100 billion. Okay. Now, let's look at what real capitalism looks like. Berkshire Hathaway. They have Berkshire Hathaway has issued a preferred in the past. I don't think anywhere near 12%, probably 6, maybe 8, back when interest rates were much higher. So it has a market capitalization of 1 trillion. All of its stock is 1 trillion. Its operating earnings are 50 billion. It has $334 billion. I think it's higher than that. I think it's 400 billion in the checking account. And the book value of everything it's ever bought is 600 billion. So the market, like this is its bourbon, it's paid $600 billion for the bourbon. And right now that bourbon's worth $1 trillion. Okay. It's a pretty good way to make such a complicated company. Like, and that's what Buffett's so good at, right? He's like, talks about these things that are so deeply complex mathematically, but he makes it sound like you're going to, cook some hot dogs on the grill or something. Okay, if Berkshire issued 50 billion in preferred stock at 12%, the annual dividend obligation would be 6 billion per year against 47 billion in operating earnings. That is covered more than 7 times over. So we could drive to Omaha and go up the elevator and say, "Hi, we're here and we'd like you to pay 12%." Of course, they're going to laugh at you. But it's not because they can't. And the companies we've all learned over the years that he buys they just literally like print money. Bitcoin doesn't print any money. It doesn't print any money. Now there's a interesting thing that Berkshire Hathaway's never paid a dividend. And a lot of people, myself included, have been like, well, what are we really buying? And it spat out one of his quotes. He said, "I'm better at investing that money than you are," which is of course true. um, did you ever like watch football, like NFL football or like real, Division I football, and guys have a couple drinks in them and everybody's shouting at the screen like they understand football better than the fucking guy coaching who makes like $1 million a month and you're sitting on the couch drinking beer, but somehow you understand football better than they do. Anyways, we've okay, yeah. Here's the other thing to get like real big picture I think that makes that. Why don't we just have a national pension fund run by Berkshire Hathaway? Did you ever think about this? Why are there all these like 1950, like the number of people who bought stocks for themselves was very, very low. There was no 401k, there was no IRAs. You either had a pension or you figured it out. The percentage of the population that owns stocks from 1932 to 1962, I'll bet is 20-ish%. And their liquid net worth in the stock market was minimal. You bought like US Steel and you collected the dividends, right? Like this real simple, like back to the coal cattle argument. Like they make steel, they sell the steel, the money comes in the checking account, and they send out like a little dividend. That's how the whole thing used to work. Well, that's not how it works anymore. So everybody's like jazzing the whole system to see if like Elon Musk can like build God around the earth to make all this work. And it's weird, isn't it? I mean, I don't, even though I spend so much time like talking about, like, I don't even know. But the two problems are the inflation problem and the income problem. hitting at the same time, namely baby boomers. And the way they've decided to do with that is to increasingly vote for people to go to Washington, D.C., whose job it is to make the stock market go up. And really, the Trump administration now is just a whorehouse. It's just like they just openly break the law. I don't know. There's a headline this morning. They're doing some defense deal, and Trump's son's in on it. Like, nobody even fucking cares anymore. So, I mean, I thought it was good to bring in Berkshire Hathaway because, I mean, Warren paints himself as like Mark Twain or something, but he is a ruthless son of a bitch. I mean, like, when you really get down to it, make no mistake about it, there's no way he could muscle his way through these corporations. He's also very conscious of who he does business with, and he says that. I remember seeing Charlie Munger interviewed, and he was just like, yeah, we really never felt comfortable doing business with Jack Welch. Like, it wasn't about General Electric or something like that. He was like, we don't trust that motherfucker. And Jack Welch, when he left, I love to beat up on this, he left, GE was worth $600 billion. 15 years later, GE was worth $60 billion. Jack Welch, the day he said bye-bye, stock went down 90%. So there's a nice thingy. I really think you should maybe look at this, think about it. As you can see, like, I haven't given you the answers. I'm not on here just destroying Michael Saylor. I don't think that's really my job. But I do think it's really an interesting. Should you sell 15% of your 401k right now and pay off the mortgage on your second home? That's a tough question. I'll leave you with this. So the thing, there it is right there. I forced it to name the presentation Income from Debt. Because when Michael Saylor issues securities to you, it's a debt. Well, not if it's equity. Yes, it is. Debt and equity, it's like in The Departed when you're looking down the barrel of a gun. What's the difference? Debt and equity are both a claim against some sort of capital. Follow me? And I'm not sure that Bitcoin should really be considered capital. That's step number one. But what he is doing, and this is what it looks like. I mean, get this and send it to your kid. It's $9.95. Like, subscribe, and he's generating income. Michael Saylor is generating income from his investors because Michael Saylor can issue you will buy debt from Michael Saylor. Let that sink in for a second. You're lending money to Michael Saylor, not Diageo, not Berkshire Hathaway, not Alliance Resource Partners Coal Company. You are giving a person who has really no other assets than this ability to issue securities. Now, do you understand that Warren Buffett could issue just like I think Amazon guy Jeff Bezos just sold $5 billion worth of Amazon stock. Okay, and I think he's worth like 300 billion or 400, some giant number. But think about that. Like, you just go, Bob, get me 5,000 millions. Yeah, I'll get that next Wednesday. You know what I mean? Like, you can't even go into the bank and ask for $5,000. Jeff Bezos can just pull $5 billion out of the air whenever he wants to. But going back to Warren Buffett, he could issue through his career $10 billion in new equity whenever he wanted. Think about it. He could put the money in his pocket. Nobody would say anything. Bill Gates made the Bill Gates Foundation because Microsoft Corporation bought 2.3 million. I did the research on this myself one day when I was a stockbroker. I was like, why is Microsoft buying? The transactions were the exact same transactions day after day. Bill Gates would sell 2.3 million shares of Microsoft. He hired a broker somewhere in Seattle to do this. And Microsoft would buy the exact same shares day after day after day. So all the cash of the Microsoft Corporation just became the Bill and Melinda Gates Foundation. Like, who's to say no? So, but the thing here is called income from debt. And I guess that's like, I like to do these big heady ideas with, God, man, and machine, and, like sort of get a little carried away sometimes. But this is the problem, isn't it? Though everybody knows America's $100 trillion in debt. Like literally the total credit market debt is $105 trillion. When Obama took office, it was $55 trillion. When Reagan took office, it was $2 trillion. Since Reagan, all the debt, mortgages, treasuries, car loans, is up 50x in less than 50 years. So, while at the same time, the baby boomers that like put this whole political thing in motion, just Jack Welch can just fire all the engineers. What do we need engineers for? And now here we are, like the only thing left is really this financial engineering. So, with that in mind, I have some ideas, and I'm happy to take some input on it. I'm thinking of going on Kick because Engine Chucky told me to. I'm thinking of doing that on Friday nights. It has a very, very loyal following for very young people like in their 20s. And I'd like to do like a show for them, maybe Friday night, play a lot of R&B, have a little fun, maybe call it Black Friday or something like that. I like to do things edgy. And then just every once in a while, like throw in some financial stuff and some other stuff and have some fun. And then I'm thinking very seriously of going on Rumble. And as the name implies, because that's sort of where all the conservative people are. And I just like to just beat the out of them. And none of them really know what to do anymore about Iran, Trump, the stock market, Elon. Everybody's lost. I mean, the conservative movement's sort of like just, truly the pendulum that like started with Reagan is now like over here and is like, we just voted for like a Muslim Marxist in New York City. You know what I mean? Maybe that pendulum's going the other way. So those are some things I'm doing. This is, it's only 11 pages. I asked it to turn it into like a little presentation. It's not, it's not like an investment thesis for you to go make a trade tonight. It's really something I think that as you think about, should I buy this? Should I buy that? Should I spend down like, for example, to be funny, people used to say, what should I invest in? And I used to say half a dozen Rhode Island red chickens. The price of eggs went up and I, had some fun with that. I'll leave you with the debt part. There's one thing you can do with your money where it's impossible to make a mistake. And that is to pay down debt.